Hi, and thanks for joining us today. I'm in studio with Namir Hallak, U.S. tax principal here at Davidson & Company. Namir, the real estate market's hot, and many Canadians might be looking towards the U.S. to purchase a rental property.
Oh my gosh, palm trees and warm sunshine sound amazing right now.
How about a wintry aspen cabin?
To escape our cold Canadian winters?
Fair enough. What do foreign investors need to know about U.S. taxes when purchasing a property in the States?
So one of the first questions that comes up is whether or not those real estate activities in the U.S. constitute a U.S. trader business. So is your rental income treated as effectively connected with a U.S. trader business, ECI? There's actually no definition in the tax statute of the term trader business within the United States. So instead, the concept has been developed mainly by the IRS and court decisions. So as an example, if Bahar is a real estate kingpin, or I guess queenpin, and owned and managed directly or through an agent several U.S. properties, then it's definitely a U.S. trader business.
Baby steps. So if I purchase one California rental property, will my income get automatically picked up by ECI?
So you do have to be careful. It is a question of fact and circumstances. Rental income is not automatically treated as a U.S. trader business just because you own that U.S. rental property. And so some of the factors the IRS is going to consider are whether those activities are extensive, regular, and continuous. So if your rental activity is just receipt of rental income, it's likely not a U.S. trader business. And if that's the case, that U.S. gross rental income can be treated as FDAP and subject to a 30% tax withholding.
More acronyms? Okay, what about my rental expenses? Can they not help grind down the 30% tax?
Maybe that's what they're calling it gross. Look, in all seriousness, the risk of your rental property not constituting a U.S. trader business will mean that you're subject to a 30% tax by the IRS on that rental income without allowing you any deductions, depreciation, real estate taxes, interest, utilities, and so forth.
That Palm Springs property is not sounding so hot right now.
Look, foreign investors have an opportunity to file an often missed net election to allow the income from that rental property to be treated as ECI. So you get taxed on your net income after deducting all those expenses related to your U.S. real estate business. So as an individual, you'll get taxed at your graduated rates, or as a corporation at 21%. And if your rental expenses are higher than your rental income, it just means that you probably won't be paying taxes at all on that rental income.
When do I need to file this election?
So the election needs to be timely filed with your federal tax return or with an amended return within the statute of limitations once you have income from that U.S. real property. Look, my advice to Canadian clients, file the protective election if you are not sure if the income from your U.S. rental property will constitute a U.S. trader business. That election then stays in effect for subsequent years.
California Dreamin', sign me up. And if you have any questions for Namir, please give him a call at the number at the bottom of the screen or send him an email at ustax@davidson-co.com. Thanks, everyone.